It was the end of the Second World War, the deadliest conflict in human history. Cities lay in ruins, empires had fallen, and the global order had been rewritten. Out of the destruction, one nation stood stronger than any other, the United States of America. Its economy was booming, its industries unrivaled, and its currencies, the dollar, became the world's financial standard. In this new world, one institution would rise above all others, symbolizing both America's ambition and its contradictions, the Bank of America. But the story of this financial empire didn't begin in skyscrapers or trading floors. It began with an immigrant, the son of a fisherman and a farmer, who dreamed of building a bank for the people, not for the powerful. His name was Amadeo Pietro Giannini, and he would change the very meaning of banking in America. Giannini's story began in 1870 in a small Italian village in Liguria. His parents, Luigi and Virginia, were simple people. When the California gold rush swept across the world, Luigi packed what little he owned and set out for America. He settled near San Francisco, working hard in farming, real estate, and later hospitality. He saved enough to buy a modest hotel, the Swiss Hotel, where Italian immigrants stayed while they looked for work. Life was beginning to stabilize, but when Amadeo was only 7 years old, tragedy struck. Luigi was killed during a violent labor dispute. The young boy watched his mother struggle to hold the family together. Virginia, a widow with 3 children, took over the family's small farm and business, managing everything herself. She worked before sunrise and long after sunset, teaching her son that in life, work is survival, and trust is everything. Amadeo grew up in the fields, selling produce beside his mother at the markets. He learned to read people, who could be trusted, who couldn't, and how to make a deal with honesty. That childhood discipline shaped him for life. By 14, he was managing the family's books. By 21, he had taken full control of the farm and grocery business, turning it into a profitable enterprise. He was relentless. Every day began before dawn and ended after midnight. He traveled by horse, wagon, or riverboat, buying and selling produce across California. By his early 30s, he had made his fortune. But what he wanted now wasn't more money. It was meaning. Giannini had seen the power of banks and their cruelty. In the Italian immigrant neighborhoods of San Francisco, families were routinely turned away from lending institutions because of their accents, their poverty, or their lack of collateral. Banks catered only to the wealthy, leaving immigrants to borrow from loan sharks who charged ruinous rates. So, at 34, Amadeo Giannini decided to create a new kind of bank, one that would serve the working class, the small business owner, the immigrant, and the dreamer. He called it the Bank of Italy. When it opened in 1904 in a modest building on Montgomery Avenue, people laughed. Who would trust an uneducated grocer with their savings? But Giannini had something no other banker did. He spoke the language of his clients. He knew their struggles because they were his own. He offered loans to barbers, tailors, farmers, and bakers, people who had never set foot inside a bank before. He promised that his institution would be built not on privilege, but on trust. Within a year, the Bank of Italy had more than 1,000 customers. Within 2, it had $1 million in deposits. The newspapers began to notice. They called him the People's Banker. Then, in April 1906, disaster struck. At 5:12 a.m. on April 18th, a massive earthquake ripped through San Francisco. Buildings collapsed, fires erupted, and gas lines exploded. For 3 days, the city burned. Tens of thousands were left homeless. More than 80% of the city was destroyed. As chaos spread, Giannini realized his bank and the savings of thousands of families were at risk. The vaults were surrounded by fire. If the gold and cash melted, everything would be gone. So he acted. He and his stepfather loaded the bank's money, gold, silver cash, and ledgers, into horse-drawn wagons. To disguise them from looters, they covered the wagons with crates of oranges and vegetables. Through the burning streets, choking on smoke, they escaped to safety in San Mateo, miles away. Other bankers fled the city, locking their doors until the chaos passed. But Giannini returned within days. From a makeshift table made of 2 barrels and a wooden plank on Washington Street, he began doing business again. While every other bank refused to lend money until they could verify collateral, Giannini did the opposite. He gave out loans on a handshake, trusting people to rebuild their homes and businesses. To him, confidence wasn't a word, it was an act, and people remembered. When the fires were out and the city began to rebuild, it was Giannini's loans that kept the workers fed and the construction alive. His customers repaid every penny. In just a few months, the Bank of Italy became one of the most trusted institutions in California. The earthquake had destroyed most of the city's banks, but for Giannini, it had done the opposite. It made him a legend. By 1907, a nationwide financial panic shook America. The banks across the country failed and depositors lined up in fear. But in San Francisco, people lined up outside the Bank of Italy to deposit their money. In a world collapsing under greed and speculation, Giannini had built the one thing that couldn't be bought: trust. With confidence growing, he began expanding his vision. He opened branches across California, believing that banking shouldn't just belong to the rich cities, but to every community, no matter how small. At a time when American banking laws prohibited multiple branches, Giannini challenged convention. He argued that stability came from unity, that if one branch suffered, the others could support it. His model would later define modern banking itself. By 1918, as the First World War ended, the Bank of Italy had more than 50 branches and hundreds of employees. It was no longer a neighborhood bank, it was a network, a living system built on trust, efficiency, and inclusivity. But for Giannini, California was only the beginning. He dreamed of a national bank that could connect farmers in Fresno to businessmen in Chicago and shipbuilders in Oakland to investors in New York. To achieve that, he needed capital and influence. In 1927, after years of growth, he merged the Bank of Italy with several others, expanding into Los Angeles, Chicago, and beyond. He began to acquire smaller institutions, building what he called a bank for everyone. By the late 1920s, Giannini had turned his California dream into a national powerhouse. He had rebranded his institution with a new name, Bank of America. But success came at a price. In the financial centers of New York, his rapid rise didn't go unnoticed. Wall Street's elite bankers, men who had ruled America's money for decades, began to see him as a threat. And at the top of that pyramid sat a man who considered himself untouchable, John Pierpont Morgan, Jr., heir to the J.P. Morgan dynasty, the most powerful banker in the world. To Morgan, banking was an exclusive club, and in his eyes, Amadeo Giannini, a farmer's son from California who lent to immigrants and laborers, didn't belong. The stage was set for a clash between two worlds, old money and new vision. On one side, the East Coast elite who believed banking was a privilege reserved for the few. On the other, a self-made immigrant who believed banking was a right for all. And as the 1920s roared with wealth excess and speculation, their paths were about to collide. Not just over money, but over the very soul of American finance. Because Giannini's rise had only begun. His next move would take him straight into the heart of Wall Street itself, and into a war that would define the future of global banking. By the late 1920s, Amadeo Giannini was no longer the humble grocer from San Francisco. He was now one of the most powerful bankers in America, and the founder of a financial empire that stretched from California to Chicago. His dream of a bank for everyone was becoming real, but to complete it, he needed to conquer one last frontier, New York City. New York was the heart of global finance. It was where fortunes were made and destroyed, where decisions in smoke-filled boardrooms could shake nations. To Giannini, it was the final step in proving that his vision of banking, built on trust, inclusion, and service, could stand against the East Coast elite. But to enter that world was to declare war, because New York already had a king. His name was J.P. Morgan, Jr., heir to the legendary House of Morgan. His father had been the architect of modern American capitalism, the man who stabilized Wall Street, financed U.S. Steel, and bailed out the U.S. Treasury during crises. Morgan Jr. inherited not just the empire, but the arrogance that came with it. He believed finance belonged to his kind. Old money, established names, men who dined at the same tables and moved the same markets. Giannini was everything Morgan despised. An Italian immigrant, a man of the working class, a self-made banker who lent to immigrants and farmers instead of industrialists. To Morgan, Giannini wasn't a rival. He was an intruder. But Giannini didn't care. He had spent his life being underestimated. Now, with his bank growing faster than anyone imagined, he saw a chance to plant his flag in Wall Street's backyard. After years of expansion across California, he moved east, opening a branch of his Bank of Italy on Wall Street itself. To the old guard, it was an act of defiance. To Giannini, it was destiny. In 1927, he took his boldest step yet. Using profits from his booming operations, he acquired a mid-sized bank in New York called Bank of America. It was a struggling institution, but Giannini saw potential in the name. Soon after, he merged his Bank of Italy with it, and the modern Bank of America was born. The move sent shockwaves through the financial world. For the first time, a West Coast banker had taken on Wall Street at its own game. But Morgan didn't take defeat lightly. He saw Giannini's success as a threat, not just to his influence, but to the entire financial hierarchy. The son of Italian immigrants was rewriting the rules, and Morgan would not allow that. He began his counterattack quietly. He used his network of bankers and traders to start rumors that Giannini's banks were overextended, that his rapid growth was reckless, his loans unsound. Soon after, Morgan-backed investors began shorting the stocks of Giannini's companies, driving down their prices. At that time, Giannini was already facing health problems. He had contracted polio and was in Europe for treatment. While he lay bedridden, Morgan's men went to work. Bank stocks across the country began to fall. In San Francisco and New York, panic rippled through investors. When Giannini returned, he saw the damage. His stock was collapsing. Confidence in his leadership was wavering. But instead of retreating, he did something no one expected. He created a new corporation, one that would consolidate his banking operations and shield them from the attacks. He called it Transamerica Corporation. Through Transamerica, Giannini restructured his entire empire. It allowed him to expand into insurance, securities, and other industries, bypassing the restrictions that limited traditional banks. His rival saw it as a stroke of genius, a structure that could weather any financial storm, but Morgan saw it as defiance. By the late 1920s, the tension between them had become open warfare. On one side stood the titan of Wall Street, commanding the might of New York's oldest money. On the other, a self-made Californian who believed banking should serve the common man. Their duel reached its climax in 1929. That autumn, the stock market crashed. On Black Tuesday, October 29th, Wall Street collapsed under its own weight. Fortunes evaporated overnight. Thousands of investors were ruined. Banks closed their doors as depositors lined up in panic. The crash tore the mask off America's financial illusion. Speculation, manipulation, and greed had built an economy on sand. And now the tide was rushing in. Even Giannini's Transamerica was hit hard. Its shares plummeted as investors scrambled to withdraw their money. Within weeks, millions of dollars in value were wiped out. For the first time, Giannini's empire trembled. Inside his boardrooms, panic spread. Shareholders demanded answers. His own directors, many of them influenced by Morgan's circle, began to turn on him. They blamed Giannini for the losses, accusing him of reckless expansion. And in September 1931, the unthinkable happened. Amadeo Giannini, the founder and visionary who built his empire from the ground up, was forced to resign from his own company. He walked out of Transamerica's headquarters humiliated, stripped of the institution he had created, betrayed by the very system he had tried to reform. Morgan had won. For months, Giannini disappeared from the public eye. He returned home to San Mateo, where he lived quietly with his wife. Friends said he spent long hours walking his gardens, thinking about everything he had lost. To the press, it looked like the end, but those who knew him best understood Giannini was not a man who quit. Even in defeat, he remained one of Transamerica's largest shareholders, and from that small advantage, he began his comeback. He reached out directly to stockholders, the small investors, the everyday people who had believed in him for years. He told them the truth, that Transamerica had been hijacked by East Coast financiers, men loyal to Morgan who wanted to strip it for parts. He asked for their support to take it back. What followed was one of the most remarkable proxy battles in American business history. Across California, thousands of small shareholders joined Giannini's cause. To them, he wasn't just a banker, he was a symbol. The immigrant who had fought for ordinary people and refused to bow to Wall Street. Letters poured in, meetings were held, confidence in him grew again. In 1932, during a dramatic shareholder meeting, the votes were counted. The result shocked Wall Street. Giannini had won. The shareholders had chosen him over Morgan's loyalists. He was reinstated as chairman of Transamerica, and by extension, the Bank of America. The old board was fired. The Wall Street insiders were out. When he returned to California, thousands gathered to greet him. Employees lined the streets with banners and flags. The newspapers compared his return to that of Julius Caesar returning victorious to Rome. Giannini's redemption was complete, but while he had won his personal war, the nation around him was still suffering. The Great Depression had destroyed businesses, banks, and families alike. More than 9,000 banks had failed. Unemployment had soared to 25%. Breadlines stretched for miles. The American dream was on life support, and once again, Giannini stepped in where others would not. While other banks refused to lend, terrified of defaults, Bank of America continued to issue loans. Giannini understood that recovery required trust, that the economy could not heal unless someone believed in people again. His bank financed farmers, builders, and small businesses across the country. He encouraged his managers to approve loans based on character, not collateral. If a person had integrity, he believed they would repay, and they did. Under his leadership, Bank of America not only survived the Depression, it grew. While hundreds of banks vanished, his deposits increased by tens of millions. By the late 1930s, Bank of America was one of the strongest financial institutions in the nation. And when war broke out again in Europe, Giannini played another role, financing the industries that would supply America's war effort. During World War II, his bank supported the construction of ships, aircraft, and manufacturing plants. By 1945, Bank of America had become the largest commercial bank in the world. The immigrant's dream was complete. When the war ended, the world entered a new era. The United States stood as the economic superpower, and the dollar became the global reserve currency. From the ashes of conflict, a new empire emerged, not of kings or armies, but of capital. And at the center of it stood the institution Amadeo Giannini had built with his bare hands, the Bank of America. But as the world celebrated, Giannini was growing old. His health was fading. He retired quietly, dividing much of his fortune between education, research, and philanthropy. He believed wealth meant nothing if it didn't serve humanity. In 1949, at the age of 79, he passed away peacefully in his home. The man who once carried his bank's savings in a wagon disguised with fruit crates died modestly, leaving behind one of the greatest financial legacies in history. At the time of his death, Bank of America had more than $6 billion in assets and over 500 branches. Yet Giannini's personal estate was worth less than $500,000. He had built the largest private bank in the world and died almost as humble as he was born. But as his era ended, a new one was about to begin. The age of trust and character was giving way to something colder, faster, and far more complex. The age of corporate finance. Giannini had built a bank for the people, but those who inherited it were about to build a machine for profit. After the death of Amadeo Giannini in 1949, the world he helped build changed faster than anyone could have imagined. The humble bank that began with a fruit wagon and a promise had become the largest private financial institution on earth. It spanned the nation, influenced economies, and shaped modern banking itself. But as the decades passed, the spirit that had once defined Giannini's dream, fairness, accessibility, and trust, began to fade. By the 1950s, America was entering a golden age of prosperity. The war was over, jobs were plentiful, and a new middle class was emerging. Suburbs were rising, cars filled the streets, and televisions glowed in every living room. Bank of America sat perfectly positioned to ride this wave of optimism. At the helm was S. Clark Bice, a quiet but brilliant banker who understood both tradition and ambition. Under his leadership, the bank expanded aggressively, opening branches in every corner of California and beyond. By 1959, Bank of America served millions of customers and held more deposits than any other bank in the United States. But Basie wasn't content to maintain the empire. He wanted to reinvent it. In a world that was modernizing fast, he saw an opportunity to change the way people interacted with money itself. In 1958, Bank of America launched a revolutionary experiment in Fresno, California. The idea was simple but radical. What if ordinary Americans could borrow instantly without visiting a bank? The solution was a small piece of plastic, the Bank AmeriCard. It was the first true credit card. At first, it was chaos. Thousands of unsolicited cards were mailed to random households across California. Some people loved it. Others thought it was a scam. Many spent beyond their means, not realizing they had to pay interest. Fraud cases piled up. Critics mocked the idea, calling it reckless and doomed to fail. But within a decade, everything changed. As consumers learned how to use credit responsibly, Bank AmeriCard became the foundation of a global revolution. By the 1970s, it had evolved into a new system, a cooperative network of banks that eventually became Visa. It was one of the most powerful financial innovations of the century, and it was born from the same institution that once lent money to farmers on handshakes. Bank of America's profits soared. The 1960s became its golden decade. The California economy exploded, driven by aerospace, agriculture, and a new frontier called Silicon Valley. Bank of America financed it all, from the first orchards in Napa Valley to the early technology firms that would define the future. But as the country flourished, so did its contradictions. The 1970s brought inflation, political turmoil, and the end of post-war stability. The Vietnam War drained the treasury, oil prices spiked, and confidence in institutions began to erode. Across college campuses and city streets, protesters turned their anger on corporations and banks, symbols of an America they saw as unjust. In 1970, anti-establishment activists set fire to a Bank of America branch near the University of California at Santa Barbara. The building burned to the ground, captured in headlines worldwide. To the radicals, it was a rebellion against corporate power. To the bank, it was a warning. The public's trust was no longer guaranteed. Inside the institution, leadership began to shift. Tom Clausen, a pragmatic executive, took over as CEO. He inherited a bureaucracy so large that it was starting to move slower than the world around it. Clausen's mission was clear: modernize or die. Under his watch, the bank invested heavily in new technology, computers, check processing systems, and international operations. It worked for a time. Profits returned, and the company expanded globally. But competitors were catching up fast, especially a rival from New York with a dangerous ambition: Citibank. Citibank, led by a visionary named Walter Wriston, had reinvented itself with a single innovation: the ATM. The automated teller machine changed everything. Suddenly, customers could access their money anytime, anywhere, without waiting in line or speaking to a teller. It was banking without walls. Convenient, efficient, unstoppable. Bank of America hesitated at first, confident in its size. But by the time it adopted ATMS, Citibank had already leaped ahead. In the early 1980s, for the first time in history, Citibank surpassed Bank of America to become the largest commercial bank in the United States. For the empire Giannini built, it was a symbolic fall from grace, and things were about to get worse. When Clausen retired, he handed the bank to Samuel Armacost, a young executive with a Stanford pedigree and Wall Street polish. Armacost promised modernization, mergers, and profits. But almost immediately, the cracks began to show. The early 1980s brought a storm of crises. Interest rates spiked. Inflation soared. Developing nations defaulted on their debts. Inside Bank of America, a fraudulent mortgage securities scheme called ESM, Government Securities, cost the bank nearly $100 million. The press called it Bank of America's Pearl Harbor. Its stock plummeted. Confidence evaporated. Armacost's career unraveled, and soon he was forced to resign. For the first time since the Great Depression, the bank that once symbolized American confidence looked fragile. Then came a new predator, a corporate raider from New York who saw weakness as opportunity. His name was Sanford Sandy Weill. Weill was everything Giannini was not: ruthless, calculating, and obsessed with empire building. He had already made millions by acquiring and merging brokerage firms, creating massive financial conglomerates. In 1985, he saw Bank of America's falling stock and sensed blood in the water. Partnering with investment banks like Shearson Lehman, Weill prepared a hostile takeover. His goal was simple: seize control of Bank of America, merge it with his own companies, and install himself as the most powerful banker in America. For months, rumors swirled. Investors bought up shares. The media speculated about the battle to come. Inside Bank of America's boardrooms, panic spread. But before Weill could strike, the board made its move. They ousted Armacost and brought back the only man who had ever steered the bank through chaos before: Tom Clausen. Clausen returned from his post as president of the World Bank and immediately went on the offensive. To block Weill's attack, he used a legal maneuver known as a poison pill, issuing new shares that diluted Weill's ownership and made a takeover too expensive to pursue. Then, Clausen sold off risky assets, including the bank's brokerage division, Charles Schwab. It was painful, but it worked. Bank of America survived. By 1988, the company had recovered spectacularly. Profits soared to over $700 million, and its stock tripled in value. Once again, it was the world's best-performing bank. The legend had been saved for now, but the 1990s were approaching, and with them came a new era of financial ambition. The decade became a frenzy of mergers and deregulation. Banking laws that had once separated investment firms from commercial banks were repealed. The philosophy was simple: bigger is better. Bank of America merged, expanded, and consumed its rivals. Under CEO Hugh McColl Jr., the institution became an unstoppable force, merging with Nations Bank, Security Pacific, and Continental Illinois. The goal was clear: to create a single American financial superpower. By the early 2000s, Bank of America had achieved it. It was no longer just a bank. It was a global empire entangled in insurance, mortgages, investment banking, and corporate finance. But in its quest for scale, it had become something far removed from Giannini's dream. Then came 2008. The housing bubble burst. Mortgage-backed securities collapsed. Giants like Lehman Brothers fell. Panic spread across Wall Street. Bank of America found itself trapped. Its 2007 acquisition of Countrywide Financial, once seen as a bold move, had filled its balance sheet with toxic loans. In a desperate effort to stabilize the system, the U.S. government stepped in. Bank of America was forced to acquire Merrill Lynch, another collapsing titan, and accept a $45 billion bailout from the U.S. Treasury. It survived, but barely. In the aftermath, the bank's reputation was shattered. Lawsuits over predatory lending, foreclosures, and fraud cost it billions more. CEO Ken Lewis resigned under pressure, and the public's faith in the bank and in corporate finance itself was at an all-time low. Then, a quiet man from Ohio took the helm. Brian Moynihan. He was no Giannini, no Weill, no Morgan, but he understood what they never did, that in modern banking, survival meant humility. Moynihan rebuilt Bank of America piece by piece. He slashed debt, simplified operations, and embraced digital technology. Under his leadership, the bank became one of the world's most profitable institutions again. But the turning point came in 2011 when Warren Buffett invested $5 billion in the bank, a public vote of confidence that restored credibility. Overnight, stock prices surged. Buffett made hundreds of millions. Moynihan's quiet restructuring was finally paying off. Today, Bank of America serves more than 68 million customers across the globe. Its mobile platforms handle billions of transactions each year. Its digital network rivals that of any tech giant, and its influence over global finance remains unmatched. But the question that haunted Giannini still lingers. What is the purpose of a bank? Once, it was to serve the people. to lend to farmers and workers, to rebuild cities after disasters. Now, it serves shareholders, algorithms, and markets that move faster than humanity itself. The same institution that once trusted borrowers on handshakes now uses AI to analyze spending habits and charge hidden fees. It is efficient, powerful, and profitable, but it has lost something sacred. Because trust, once broken, cannot be automated. From a fruit wagon in 1904 to skyscrapers that reach into the clouds, the story of Bank of America is the story of American finance itself. The dream, the ambition, the corruption, and the resilience. Giannini built his bank for ordinary people. The world turned it into a machine for extraordinary profit. It remains one of the largest banks on earth, powerful enough that failure is unthinkable, yet fragile enough that a whisper can shake markets. And, as history has shown, every empire built on confidence eventually faces the same test. What happens when the confidence runs out? Because in the end, no matter how big the numbers or how bright the towers, a bank is only as strong as the trust it earns. And trust, once lost, is the one currency even the richest institution can never buy back.